I should just call it Onyinye.
Onyinye.
Onyinye. Wow.
Yes.
Okay. You mind telling me what that means?
God's will.
Ah, that's good. Okay. Nice name. Nice to meet you. Thank you very,
Mm.
very much for taking time out from your busy schedule. Really appreciate it, and we don't take it lightly.
But that was good to be here.
So, okay, let me see. Marvelous. Is there any, sorry, Sarah, is there any housewarming that we need to know before we get started? Okay. You might tell me what that means.
God's will.
Ah, okay.
Not really, but thank you so much, Onyinye and Seyi for agreeing to join our webinar. Really appreciate it. And David will be moderating this webinar. So you guys have met already. Thank you so much for joining, and we'll be starting shortly.
All right. All right. Thank you, everybody. Okay, let's get started. Hi, everybody. It's such a beautiful morning for me. I'm currently in the PST time zone. So, yeah, I might think I'm bright enough. So, I will kickstart with a little introduction of myself, right? And I also do want to introduce our guest speakers that we have on call today, right? And I'll just do a quick run through of what we'll be talking about. Then we'll try as much as possible not to take everybody's time. So we'll be a little bit precise and well detailed also, because yeah, we are tearing down an interesting conversation. And I think it has kind of been more of the new wave, where it's kind of becoming a buzzword. We keep hearing embedded finance here and there, right? So our goal today is to be able to like tear it down, both from a user perspective, down to regulatory perspective, and even down to like the end use cases, how it really affects human beings, how it really affects lives, how people really interact with things across the embedded finance space. So before I get started, once again, a little form of introduction. My name is David Adeleke. Interestingly, I find myself to be the CEO and founder of Zeeh Africa. And majorly at Zeeh Africa, we build infrastructure, right? With a simple goal of powering credits in Africa and also on a global scale. So for this webinar, we'll be talking about embedded finance in action, and we'll dive into how Nigerian businesses are actually building the next financial layer. And yeah, it's with me on the call is Onyinye, who is the Associate Program Manager for Open Banking Nigeria. Hi, Onyinye. Nice to meet you. Thank you for taking time to join us. All right, awesome. Okay. Also on the call with me is Yemi. Thank God I pronounced that correctly. Co-founder and managing partner of Assuredly. Thank you so much. It's so great to have you right here on the call. Then lastly on the call also is Seyi, who is also the co-founder of Crop to Cash. Hi, Seyi. Yes, good. Nice to meet you. All right. So without taking much of our time, literally, right? Majorly, one of the quick things that I want to talk about here is we want to like help the audience to understand why this conversation is even happening right now, and to be able to like I said earlier, to dissect what embedded finance is. And we also want to like dive into what has actually changed in the ecosystem for the past 12 months that makes this the right time to build financial solutions, right? That is embedded into solution. So I'll start first with so we're going to take this more like let's say a panel session, right? Wherein I kind of like throw some guidelines to some of to our speakers, and they give us their view on what they think it is. Then I kind of ask a couple of questions, and afterwards, when we're done with that, we open the floor up for questions. So on the first of my list is Onyeka, right? And we'll be talking a little about your work with open banking and the open banking framework. First of all, we understand that in Nigeria, to be precise, this is something that we've been on it for quite a while, right? So hopefully we would love to like see maybe some insight to where we are with it, what we've built so far, what's live, and what's yet to be built, right? So so majorly, we'll start first with a question, right? So for a business that has been watching the open banking Nigeria progress from a distance, maybe someone from a neighboring African country, or say, for example, a marketplace founder for a lending product, What's that most single important thing that they need to understand about where the framework starts from right now? Do you get the question?
Sorry, could you repeat?
So first off, I want to usher in us into the embedded finance, starting with open banking, right? And so people have been watching us with where we are so far in Nigeria. So we need to understand currently where is the framework at right now, right? Especially from maybe the regulatory.
Okay, so well, we've already done an introduction. My name is Onyinye, and I work alongside my colleagues at Open Banking Nigeria. So, to answer your question, the framework or where we are now with Open Banking in Nigeria, first of all, we have two primary regulatory documents which are the source of truth, and these have been in existence for close to 5 years now. So I would say that the framework is fully live, but we are still far from full implementation. So where we are now is more or less like what I say a preparatory phase. So at the foundation, we are working behind the scenes with the central bank. The framework is live, but it is not fully operational yet. So we're looking at aligning what already exists in the framework and in the guidelines with how our or what our current realities are. So because of that, we've gone behind the scenes actually to build out implementation guidelines. These are just guides, not legally binding yet until the CBN gives a clear go ahead. But these are just guidelines that are supposed to help each stakeholder tell them what they need to know now, what they need to be doing, how they should be speaking to their customers before the central bank says go ahead. We foresee that in the next few months, the CBN will possibly come out with a phased implementation roadmap, starting with maybe the big banks before moving on to the smaller institutions. But this is just what I say more or less like a prediction. We've been predicting things for the past 8 years now since we started this journey at open banking. But yeah, so we're still in the preparatory phase. The CBN hasn't given a go ahead yet. But one thing I would say is that we've built the implementation guidelines to guide the banks and fintechs and to guide businesses, small businesses, let them know what's coming, what open banking makes possible, what they can build, the new use cases, how embedded finance will even work with or when the framework goes live.
Okay, thank you. I just want to do a follow-on question, and I love the way you touched a bit on embedded finance at the last part of your statement, right? Before I move my next questions to Ms. Onyinye, right? So for the sake of knowledge, right, for our audience, let's try to first even dissect what open banking is and what embedded finance is, right? And what's the correlation between both of them?
Okay. If I give you the textbook, or okay, let me not give the textbook definition actually. When I want to understand what open banking is and what value it offers, I like to look at it from the perspective of an end user. Because at the end of the day, that's what open banking is for. We're building it for the customers, even though every institution will benefit in their own way. At the end of the day, we're building it for customers. So open banking for the very first time gives customers the rights, the infrastructure, the ability to share their data and make their data work for them. So it's not like the customers don't own the data. Customers have always owned the data, but this data currently sits within a bank's walls. So it doesn't serve the consumers. It doesn't do anything for them outside of their bank. So when open banking goes live, we think that when customers start sharing their data, fintechs and builders and innovators get to understand them better, and even other banks as well. We're not shutting banks out of this. We foresee that builders, fintechs, everybody will get to understand a customer better and then build products that are actually tailored to their needs, tailored to address them. And where I see the intersection with embedded finance is that at the end of the day, embedded finance is about meeting customers at the apps that they already use, whether financial apps or non-financial apps. But say maybe you're using Uber, which is primarily a ride app, and you don't have access to funds in that moment, but you want or we want to give you access to a loan or credit or whatever. With open banking, the lender is able to not just see one account or get one view of that customer, but you get access to all their accounts, their entire financial life with their consent, of course, and you're able to serve them better. So it's just one piece of the puzzle. There are still so many other possibilities But embedded finance, well, that's where I see the correlation between the two. Maybe empowers things like buy now, pay later. Say you are at a supermarket and you want to pay for a service, pay for a product or whatever. You get access to credits that actually meets you at your point of needs, that also understands how you actually interact with your finances, that the lender gets to assess you accurately with access to all your financial data and all of that. So that's where I see the interaction between the two of them.
All right, thank you. That's awesome. So I just want to write on that to Ms. Yeme, right? So you've been building what's it called? Financial products, financial solutions for quite a while now. Um, we would love to first get to meet you in terms of introduction one, and also still the same question, right? On what's your take on embedded finance, right? And could you maybe highlight certain use cases, right? That the audience will be more familiar with, so they can understand the concept embedded finance. Thank you.
Okay. Hi, good morning, everyone. I'm Ime, managing partner at Assuredly. And as David has mentioned, we've been in the services of building products, and so far so good. Lots more on the financial side of things. And for embedded finance, just doubling back on what Onyinye has said, is basically meeting people where they are. So I think you will find that today with Chowdeck. Chowdeck today has embedded bills payments into their application. They've embedded, I think, events into their. Basically, you can do some lifestyle stuff aside just buying food. That would have just been a typical use case of such an application. So if you look at a typical super app, right, that is what an embedded app, an embedded financed system would look like. So it doesn't mean that, okay, because I'm just in, so child deck is food industry or maybe travel industry and the likes, right? So it's meeting consumers where they are, and which would also ease, even adoption overall. So you want to sell, for those in insurance, for instance, you want to sell insurance, you are not having to download an insurance app, and or rather you want to, as a consumer, I don't have to download an insurance app to, to pay for my premium and all that. It can meet me either in my banking application or even in my travel application in terms of, let's say, travel insurance, for instance, right? So those are like the near cases of, okay, how it can be used, and we already kind of have adaptation to that today in different forms. So you find them, I think, even in I think which of the application, I think you would, I don't know if you guys are familiar with them. I think bank assurance, for instance, where the banks were trying to bring in insurance products into the banking application, right? So those are like scenarios where embedded finance, comes into play, meeting consumers where they already are.
Ah, okay. Thank you very much. So I love the scenario of child deck that you used where you can do multiple things in just one app. Think of it as a super app. But that brings me back to maybe the next question of user experience, right? So I think this still falls more in your scope, right? At what point do we get to like understand that? I mean, at what point do we say it's enough? Imagine if you now have an app, right, that is kind of doing everything. What are the risk? Yeah, let me use the word risk. Because say, for example, I have a platform that is meant for ordering food, and now all my banking activities is exposed there. So that means if just because I want to order food, it gets compromised, does that mean all my money, all my banking exposure also like gets compromised as well? So like maybe you could talk a little bit more on is it, are we going ahead of ourselves with that, right? And what are like the risks involved in if we say want to explore this innovation on a grand scale?
I won't say we're going ahead of ourselves. I think for one, I think I've had first-hand experience with WeChat.
Uh,
Um, WeChat, WeChat kind of embeds. I don't think there's any app that is in China today that does not have a mini app inside WeChat itself, right? So in
okay.
fact, consumers are more even used to sending money via their WeChat wallet as against their bank account. Your bank is even linked to your WeChat. you're ordering food is linked there. You're ordering like I think they called it, I've forgotten the name, but like their Uber, right, is inside your WeChat. So everything kind of sits in one ecosystem. So you don't have to be downloading several applications, for instance, but you're still experiencing the same thing that any other person would have. So but then it still boils down to that is why the content exists, right? So if I don't want to, I don't have to activate it. So even if the bank is embedded into my WeChat, if I don't go up there and sign up and enable it, it's not enabled by default, right? So that still gives the consumer control over their data. And in terms of like what are the risks, right? So in scenarios like that now, the risk still boils down to the platform owner, right? And as much as it boils down to the consumer, right? The platform owner. So for you to go into that kind of business, then you need to kind of set up a strong enough support arm to be able to handle where all your noise can be coming from. Because now you're not just dealing with, let's say your core strength was food in the case of child deck. Someone now buys an airtime and it fails, for instance, right? You need to have a good operational and support system in place that's able to treat that request, not just training your people now only in food delivery and stuff like that. They have to now be aware of this other system. So I would say it's more heavier on the platform owner. So going into that, you now need to understand the ecosystem you are going into. So not just because you are embedding a service that's necessarily because in terms of integration, right, you're not the one that is designing the business logic and all that. But just because you're embedding, it doesn't mean you should not understand the business logic and all that, because a consumer doesn't see the other person behind the scenes. So even if you are using InSwitch or Flutterwave, for instance, I don't know who is behind the scene. I just know that I'm on Child Deck, I'm trying to buy something, it's not working. What's the problem? So your customer support and operations needs to be very handy in solving those issues. So if you are going to go into that, then you need to be willing to extend your capacity to understanding all the industries you are now embedding into.
All right, thank you. I mean, one part that stuck out for me was consent, because really, I mean, I think consent still needs to sit also at the top of the ladder, because literally I should be able to decide what information I want to share, why I want to share it, how I want it to be shared, when I want it to be shared, right? Oh yeah, I'm actually very much tempted to come to you on this topic on consent flow, right? But before I do that, I also want to hear from Seyi. So Seyi is really the co-founder of crop to cash, and they are like a very typical use case of how they are playing very big on the embedded finance space. So hi Seyi, please, we would love to get a little introduction from you, one, and also tell us basically what you do at crop to cash and how exactly are you playing at the intersection of embedded finance.
All right. Thank you very much, David. Good morning once again. My name is Seyi Alabi. I am the founder and research leader at Crop to Cash, and I also lead our operations team. So I wear multiple hats in the organization. So what Crop to Cash basically does is we make formal financing accessible to smallholder farmers across sub-Saharan Africa with a focus on Nigeria and Kenya. And we've been doing this for a couple of years now, and it's very interesting how we play around embedded finance, if I may say, is basically through our offline accessible USSD wallet, the introduced to farmers. So one thing we put into consideration when developing our innovation was the type of unique use case that we have when it comes to the customers, and those are primarily smallholder farmers. So I'm talking people between the age of from the age of 18 down to 65, typically in the rural region, which is really characterized by low internet penetration, network accessibility, and all of those things. So what we discovered was these people need to be financially included, because we saw situations whereby some of the farmers use a piggy bank, or these wooden piggy banks. Some go as far as traveling multiple kilometers before they can access the nearest financial institution. So what we did was to create an offline accessible USSD wallet. That way, there are no network dependencies. It can work on a function phone, and farmers can easily access the platform. So while doing that, we realized there were so many other things we could embed, and that was where embedded financing came to play. So one thing we've been able to do on this unique USSD wallet is we've been able to combine different transaction offerings. The normal transactions, which is send money, buy airtime, and also agricultural transactions. So we have an active input marketplace embedded into this USSD wallet. Also, farmers on our platform can access credits just by leveraging their transaction history. Selection application.
I think we're losing you.
All your keeping records. So
Hello.
the platform is accessible in multiple local language, including Swahili. And they can also operate this in the most easy, should I say, in the easiest manner. They don't need to download a mobile app. All they need to do is dial a USSD code. And for our knowledge base, to which is like an advisory product, all they need to do is call line, and then they get access to some of these services. Play around embedded financing. First, introducing something that creates an infrastructure for them at first, and then introducing other offerings that would then better make them, should I say, more credit worthy or boost their credit profile. So that is how we've been able to introduce embedded finance into our product offerings. Thank you very
All
much,
right.
David.
Yeah. Before I continue, I think we lost you at some very little points. So, but let me confirm. Can you hear me? It's the connection better now?
Yes, I can hear you.
Good, awesome. Yeah. So I just want to do a follow-on question one before I go back to Onyinye, right? So say for example, you're working with these farmers, they don't have credit history, they've never lended before, right? So I also assume that they don't even have a credit score. So you mentioned something about their transaction history, right? But I want us to like go a little bit deeper into that, right? Exactly how you kind of like profile them for credit. How do you like give them credit? Because these people, right, they are somewhat off the grid. They deal heavily with cash. So maybe just walk us through a little bit that in detail on how you profile this informal sector. Do you
All
get
right,
that?
thank you very much. Yes, I got that. So, loan profiling for loan selection is actually a very, very interesting aspect of our business because it is something that I have lots of back and forth with our financial partners over. So, for these farmers, it is also very interesting. I need to also point out that it is strictly input financing that we do with them. So
Mhm.
we don't do cash financing, and I have my reasons for that, but we can't get into all of that right now. So when we profile these farmers for input financing, we already have an overview as to the type of crop they produce because we mostly work with food crop farmers, the type of crop they produce, the markets for the crop. Also, we leverage partnerships with farmers, cooperatives, organizations. I'll give you an example. If we want to lend to farmers in the rice value chain now, they need to be part of and it is called the Rice Farmers Association of Nigeria, RIFAN.
Yeah.
So in
River.
all of those situations, we can group them into clusters, and it helps for profiling also. Uh, Also, we help them with the loan selection. We also help them with uh, organizing the groups. Also, we only do one size fits all for each members of a cooperative. So take for instance, if there are 30 people in the cooperative and they all grow rice, we're definitely going to do equal distribution of the inputs based on the economics of production and all of that. Another thing that we do with this group of people is we sometimes adopt our own personal loan selection documents, which basically entails all a farmer needs to do to be able to access credit on the within our organizational structure. And that is things like number of years you've been an active farmer, also number of your age also, which is very important because there is an age limit for credit offering in Nigeria. Also, there is the guaranteeing and the cross guaranteeing method. Basically, all of this is to ensure that these farmers get the finance, and the financial partner, which is typically banks and financiers, they also get their capital back, and they get their return on their capital. So all of this is embedded into. Also, we have like I said, we have the group financing, which is a group of farmers within a cooperative that cross guarantee each other, and that is very good for monitoring and evaluation. And then we also have the individual application, whereby a farmer's transaction history and should I say credit profile is what is mostly leveraged. So those are the ways we've been able to do that with the embedded financing. And also, like I said, there has to be a total number of, should I say, transactions that basically proves, oh, this is what this person is doing, because that is the only way we don't uh, direct funds that is meant for agriculture to maybe traders, or should I say civil servants. So we've been able to create a structured, uh, basically in this sector, which is a very informal sector, we're basically bringing a form of organization to the to the otherwise chaotic sector that we're working in. So that's how we've been able to do it. I don't know if that answers your question, David.
Yeah, thank you. I mean, I also want to come back because it's an informal sector, right? And we're also, I mean, want to talk about consent in a way, right? And I'm also still interested to knowing how you get consent from these people, right? Especially for building a tech inclined product, right? And there we also have Ms. Onyinye, right? To also maybe drop one or two to let's see if that sector is really, really, really tech-enabled or is still manually inclined. But let me first jump back to Oye. Could you please walk us through what consent is all about, what the consent flow actually looks like, maybe typically from a user perspective? Um, Let me just maybe paint a scenario. Say when a borrower on a lending platform is asked to share their bank data, right? What experience do they look like, and what happens beneath the scene? I think you muted. Okay.
Yeah. Okay. Thank you for your question. So, first of all, let me just define what it is, because at our foundation, we see content as one of the most important investments. Your content screen and the entire content user experience is one of the most important investments that any service provider, any participants in the open banking ecosystem can make. So the framework already establishes about 5 principles of consent that each negotiation must cover, each consent arrangement must cover. So first of all, it must be explicit. So the content has to be transparent. Each consumer, and we already know, not to say or not to sound harsh, but like most Nigerians don't read all these long terms and conditions. So with open banking, we've gone the extra mile to say that it's important that customers understand what they're consenting to. So the content screen has to actually speak to them, whether in English or whatever language that they speak. So that's one thing that's particular to the open banking framework. Consent has to be informed. They need to understand what they are consenting to, what data is going to be shared, for how long, for what purpose. So that actually brings me to the other principles. Each consent arrangement is time bound. So it must be revalidated annually, or maybe if it hasn't been used in the past 180 days. But every consent arrangement has a specific lifespan. Then the next principle is that content must be revocable. So it should be stated clearly on your content screen upfront that if you no longer need access to this information, to this service rather, you can revoke your consent by clicking this or visiting this or doing this. And this is why we have the open banking consent management system, which is more or less like a centralized route where customers can log in and see all their consent agreements and also clear guidelines on how to revoke. Then there's also scope, meaning that each service provider or each participant can't collect data beyond the immediate need. So, for example, there's no reason why a loan service provider rather, would want access to maybe make transactions on your behalf. So if you're taking a loan for whatever reason, they obviously request access to your transaction history, but not for any reason to debit your account without your approval. Then each content must be documented, that is on the participant side. It must be documented in readable, auditable formats and authenticated via the two-factor authentication. This is why we also have the open banking content management system. So to walk you through a typical user experience, say a user wants to take a loan and they log on the platform or they visit the website, they get to the point where it says, oh, to continue or to access your application, we would require maybe 6 or 8 or 10 months of your transaction history. So they would have to tell the customers, this is what we want access to, your account balance history, where we get to see your income payment patterns rather, and whatnot. They can also go the extra mile to let them know that we don't have the rights, we don't have the authority to take money or debit your account for whatever reason, so that customer is well informed. Then it also has to state the scope. This access will expire after 30 days unless you choose to revoke your consent for whatever reason. We are using this data to assess your credit worthiness and whatnot. So all of this has to be clearly stated upfront to the consumer before they click agree. If not, we have defeated the first principle of consent in open banking. So the customer is then routed through the open banking consent management system, which is going to be handled by NIBS and anchored to their BVN. So because if it is tied to the BVN, each consent agreement is tied to a specific user and not just say their phone or their platform or whatever. So they select their bank. This is for the lending use case. They select their bank or banks. They authenticate through their BVN or an OTP. The details are still going to be arranged by the central bank or decided by the central bank rather, but they authenticate through their BVN. It says that, oh, we are going to gain access to your account statement for this amount of time. If you would like to revoke your access, you can do this, you can take this step. The customer confirms, and right after that, the loan service provider is granted access to their transaction history, their salary credits, all of that financial information. So that's about it for the consent.
Okay, so just off the top of my head, I want to understand, does it involve more than just data? What if we want to look at banking, I mean like money? Can money move across also board with
Yes.
this same
Yeah, in
integration?
open banking. Yes,
Okay.
with open
So
banking.
I mean, I still feel there might be certain gaps, right, from what I mean you tried in explaining. That's where I want to come to is Onyinye, right? Say for example, now one of the first gap that I'm thinking of at the top of my head is, say for example, my system got hacked into, or maybe someone impersonated me, and they're using my identity to like maybe pay on, I mean, get access to credits and whatnot, right? Um, Fine, there might be some KYC measures in place, which I would love Mr. Ime to like talk about, like certain things that should be built and tested, right? Then also, say for example, when all this is happened, what are like different gaps that you see? Say for example, can it be reversed? And even if it's reversed, right, what do you think that is not really in place that you think should be in place? I don't know if the question is clear.
Well, to an extent, yes. I don't know how many people have used the I agree BVN lookup, where you have to get an OTP when you're trying to verify your BVN, or it goes to a NIBS website, you put in your BVN, then you put in an OTP, then it now shows you a screen to determine the data that you want to allow for whoever is calling that, right? So that's basically like the simplest consent um, use case that currently exists today, right? I will say that, okay, what are the gaps? So the expectation from the open banking framework is that there's actually a means to revoke that access, because I don't think today there's a means to revoke what currently exists today with NIPS, but the expectation from the open banking framework upon implementation is that you should be able to reverse that. However, I don't think the risks that still, how I put it, so the risks that exist today with identity theft is not necessarily going away. Like the framework is not necessarily going to immediately make all the bad things go away, right? We still have those scenarios today with even your WhatsApp number being swapped. I think thankfully NCC today decided to stop giving people other people's number, which was very chaotic, right? So those risks still exist. However, right, I think like you mentioned, the most important thing in this whole flow is the ability to revoke, right? So you would know that for today, for all the scenarios where you log in, I think another closest scenario is logging with my Google account, right? You know, when you log in with your Google account and then you go to your Google profile, you get to see all the applications that your Google account is associated with. And from that view, you don't even need to do that app. From that view, you can revoke your access, right? So that's something that needs to be put into practice and put into play, and then users get familiar with how to do that. And even the platform providers as well need to also have the means. When I call in and tell you that, oh, I've been hacked or something is, I need to revoke my access, they too should be also from their end be able to do that for the consumer, because that is what will build the trust at the end of the day. Because in all of this, right, this is going to pretty much ride a lot on trust. The trust that I trust that you are able to safeguard my data. If anything goes wrong, I'm able to revoke my data.
Okay. Just right on that also, right? Say for example, a product is built at the horrible version possible. What I mean for users, because it's kind of better if we prevent certain things than having to now start looking for ways to complain and revoke maybe whatever has been done. What are the first differences? Like, what are the major differences that shows up, maybe on as a user, right, on any general platform before I maybe proceed to like giving my consent or using the platform or like putting in my sensitive information. So for a product that is badly built, right? I mean, the UI UX might looks maybe cool, right? But outside the UI UX, what are like maybe quick signals that a user can actually pick points and say, oh yeah, there's danger here.
I don't think there's any. Okay, they actually in this current dispensation, yes, they can be very good looking applications that are still dangerous.
Yeah.
But but I would say that, for example, now part of the things that you did not read, which is the part where we still have a problem where people do not read. But if you notice, one of the things that CBN had said for banks, for instance, who had apps, that you must ensure that your bank name is properly stated in your application. Like, so even if your product's name is different from the banking license, you must ensure that your CBN licensed name is very visible to your consumers. So almost I think sometime last 2 years, right? Almost everybody had to update the landing pages of their applications. Once you log into the application, so you have to see licensed by CBN, so that you know that, okay, this is actually. So those are like the areas that you can say, okay, is this app actually a genuine application? And also, even for the open banking gateway, as it were, the expectation is that even aside the consent, even the people that would even be able to request for your data, they too are supposed to be KYC, KYB, or KYC depending. They too are supposed to go through their own onboarding and and then even tiered to determine, okay, based on your license, based on your your KYB, which is know your business, based on your KYB, right? Okay, this is the level of information you can get. This is the level of information you can get. So everybody doesn't necessarily even get all the same thing at once, right? So from the API consumer standpoint, that's what they call them. That's those that don't go to now reuse the data that the user will be consenting, right? There's a whole will I call it onboarding, registration, verification of those parties, right? So it's not just anybody on the street that will just have access to be able to plug into a banking data and pull all your data down, right? And so those are the safeguards that have been put in place. And then for the user standpoint as well, right? So this is where the sensitization comes in from the open banking to keep telling people what it's about, what you're supposed to do, right? How you are able to consent, because this consent is like everything in all of this, because a typical Nigerian would have like almost 5 closed banks. So it means so that someone saying they're putting everything into one place for you, right? You need to know how to give access and how to reject the access that you have given. So it's more or less paying attention to the parties that you are, because I think that's one of the reasons why SSPC came in to try to kind of knock off a lot of lending applications, right? Because they were, like I said, the risks and the fraud would not go away. It's just the education that needs to be optimized and optimized and elaborated more for people to get to know what these things are about and what is expected, who is real, who is fake, and all that.
Yeah, thank you for hinting on my next question. But let me first go to this same question I will apply to everybody, all our speakers. But let me first start with Seyi, right? And want to talk about the regulatory part of things. So I think this is unique for every individual speaker, right? So, but starting with Seyi, now that I'm a farmer, right? I'm a tech platform. I'm a bank. I'm a lender. I want to believe integrating all this into one super app, right, should come with regulatory concerns because these are like unique cases for certain companies and they go through certain stress of acquiring certain licenses, going through certain due diligence and whatnot. So, starting with you for Shay, starting with you, Shay, right? What's the regulatory guidelines like over there, right? What are the necessary things that needs to be in place, and how tight do you think it is? Do you think it's they are being choking or they are very relaxed, especially on the Nigerian scope of things? And also, let's talk a little bit also on the Kenya markets as well.
All right, thank you very much. So, if we're to compare regulatory or compliance measures between Nigeria and Kenya, I would say very similar, to be very honest. And one way we've been able to stay compliant when it comes to building some of this infrastructure is we've been able to do that with the support of, we've leveraged partnership a lot. So with the banking aspect of things, instead of acquiring a banking license with maybe $1 million or something, we partner with financial institutions. So our product can easily be plugged into their USSD interface. We also generate dashboards for them that basically helps them with this credit profiling and every other thing. Data sharing and all of those things, we are very compliant with that. We are NISTA compliant. Nigeria, something tech, something. We are NISTA compliant. We've also been able to replicate the same operating principle with the Kenya market also. Basically, using partnership, leveraging partnerships with financial institutions, with developmental organizations, just to be able to develop and also disseminate these solutions to farmers. So I would say don't joke with compliance because in a world like ours, you're just one particular one policy away from maybe ruining your entire business model. So one needs to be very careful, one needs to be very compliant. Instead of cutting corners, just do the right thing and don't hope not to get caught. You should not hope not to get caught. And that's something I used to tell people. You're a business, you're not when you're not compliant, it is the wrong message in situations like maybe when you're not getting investigated or when you your license revoked or your operation shut down. It basically sends the wrong message to even your users and the few partnerships that you've been able to build. So, but always compliant, even down to NAFDAC regulation for our inputs space. It was when I started this work that I realized agrochemicals need certain certifications before you can even sell them. fertilizer, for instance, now, some of the basic chemical components for urea fertilizer can also be used in the production of explosives. So when you're moving chemicals like that, products like that, there are certain licenses and certain compliance measures that you really need to employ. And also be very open to due diligence, and I mean physical due diligence. So most times when we're talking to a financial partner, talking to a developmental organization, talking to a donor, and they mention due diligence, we are always quick to invite them over to the office, because then it's not just about conducting an online due diligence. Come over to the office, meet some of our farmers, and then once you're open, I think things tend to move faster and better for you on the compliance aspect. So that's what I would say. And data, data sharing. We spoke about consent a bit. I can also touch on how we obtain consent from smallholder farmers. So we also incorporate elements of financial orientation, things like instructing them never to disclose their transaction PIN to anybody. We always send them messages. No staff or employee of Crop to Cash will reach out to you to request for your transaction PIN. Your transaction PIN should be personal and should not be shared with anybody. So all of those things are how we've been able to build compliance and also draw consent from farms. Also, consent as to credit or the purpose of the credits and other information. It's basically well written out, it's well spelled out, and we also make them sign physical consent forms for a lot of them, because sometimes it is easy to say, oh, I consent to this, and then you forget about it. So sometimes we also sign physical consent forms as to some of these operations, most especially, like I said, when it comes to lending. Lending is very interesting, and it's it's easy to get carried away after 3 months. And also, you need to remove excuses from these operations. Like farmers can easily give you excuses. Oh, I forgot I took a loan from you, or oh, I didn't know it was a loan. I mean, we've been in situations where smallholder farmers were interviewed after the NISA project back then, and what they said was that they didn't know that it was a loan, and they thought it was free money so that they could vote for Buhari for second term. And this particular farmer said it's on live TV. So I was like, oh, okay. Those are the things that we have to learn from when it comes to securing consent, getting written consent, signing. You'll sign a form. Other members of their cooperative will countersign. We even sometimes include the local leader, should I say, the local leader in a particular area. So it's a very, very interesting thing when you break it down to the last mile. Yeah.
All right. Thank you very much. That's very, very, very well detailed. Okay, so let me come to Ms. Uyeme, right? Also on still the regulatory part of things, and I think our time is actually already good spent. It's an interesting conversation. So that's part one of the question. Then the other part of the question would be to like bring it home generally, whether I think from this conversation we are all for embedded finance, right? So it would be love to have like something close to a closing remark on the overall benefits of embedded finance, like how it really helps the economy, how it helps individual, right? Yeah, like why should we promote embedded finance also? And yeah, then we go to Oye.
Okay, I think the value sells for itself overall, because bringing things to where people are automatically means that you get customer way easier than you would have on a typical day. Because if I keep saying that the cost of getting people to download your app, I think people don't know, most times don't actually anticipate that, right? I I keep saying that I have a cousin who, the minute you just tell her there is an app, she's like, oh, I'm not doing again. Like she's like, don't worry. So right, so for people like that, imagine that, okay, well, getting to where WhatsApp is supposed to get to eventually. I'm on WhatsApp and I'm able to pay for my electricity bill. I'm able to buy airtime. I'm able to get a loan. I'm able to subscribe to my subscription or whatever it is, right? That means that the cost of distribution is significantly reduced because I would not now, coming from a platform owner standpoint as well, right? Because for embedded finance, basically is someone else providing a service that someone else can plug into what they're already offering, right? So it's like a value chain, right? So and it's adding value to everybody on the chain. I don't have to start thinking of how to distribute my product after my financial services after building them, right? This other person doesn't now, lose customers because you're not giving them everything in one place. They have to go to different places to get them. So it's an inevitable, like call it value add, right? Across board, across all parties, from the consumer to, if you do, like friction is one thing that, keeps making things harder. All right. So the minute you remove friction, adoption becomes very easy over time, right? If so, even the lending that we're talking about, that people will not pay back and all that, if the lending is embedded into your day-to-day activities, because I think that's even what Child Deck does today for even their vendors, right? They're able to get I've forgotten how they call their own part of what, like loan based on their inventory and based on their sales, right? Because I'm seeing your transaction on a day to day. I know that okay, you are good for the money. You may not have physical cash um to be able to stock up, right? But I know that okay, if you have your stock in place, you are able to, sell and get back money. So it's very easy for me to now give you loan, even with that, with an empty bank balance, right? Because I can see your full experience, right? So it's value add for all entities across board, and it's something that should be adopted. And I like that, regardless of like the friction we still have, not having the full open banking system in place yet, that people are, innovatively solving for it. So it means that when open banking is here, that means adoption would not necessarily be so hard because it's already something that's already baking in different ways into the existing ecosystem.
All right. This is not the art disclaimer, right? Because part of what you said resonated very much well with me. And I just want to like hint a bit on what we're also doing at Zeeh, right? On the open bank, sorry, on the embedded finance part of things. So one is working with one of the top e-hailing e-hailing company, yeah, in Nigeria, and majorly is leveraging the data they have of their drivers to be able to offer them credit facilities, right, buy now later services. And just like you said, in terms of lifestyle repayments, I'm writing an article on that also, wherein fine, the culture of Nigerians to repayments might not necessarily be that they don't want to repay. It might just be a mindset shift, right? They don't necessarily need to feel the burden of, oh, I have these repayments to do. So what we try to do in that part is all we just tell them to do is keep on taking more trips, right? Keep on doing more orders and whatnot. Then a little portion, a little percentage, right, of what they earn goes back into the repayments, and everybody's happy. And yeah, so that's one. And also you mentioned something about WhatsApp. We did a project also with Sipstar, which we call Project Tatna, and that's from the comfort of your WhatsApp. You'll be able to like apply for credits, say, hey, I need a credit of 10,000 naira. It asks you a couple of questions like you're chatting to your brother, your sister, and from there it's kind of like build a credit score for you, and boom, the money hits your bank accounts. And you can still use the app to like, hey, okay, what's my repayments and whatnot. So I just have to like, it's not an ad, but I just have to like chip that in to show that, yeah, I think this is very, very needed at this point in time. But I also still want your take on the regulatory part of things, right? As still the final question. Then we have the chat session. I think we can start dropping in our question also. But I still have one question that I think I would like you to take before, and I also like when you to also to write on the question as regards also the regulatory part of things. So the question goes thus, Finova says, can a fintech not directly licensed, but backed by a licensed commercial bank have access to the open banking API? Okay, I think this should be specifically for Onyinye. But before we jump into Onyinye, could you just maybe touch a bit on the regulatory part of things? Because now I'm building an app, and as an app, that means I need to go and do I necessarily need to get NDPC? Do I need to get my banking license? Like, isn't that not like where does the intersection come from?
Okay, so I think NDPR is kind of sort of mandatory for everyone,
Okay.
because so long as you're dealing with personal information, right, it's something that your platform has to kind of be certified against. So it's not, and I think the cost of even getting it is not as it's not trivial as compared to getting a license. And I know that even before license started getting very, I think even till now, but instead of before people saying that gaining license is one of the things that existed before the license people became very popular was more or less partnerships and MOUs, right? Like that's why I went back to the step where I mentioned that licensed by. So you notice that for some products as well, they may not the license owner may not be the one that is actively in the operations of it, but because they have a partnership with the owner of the product, right, they would now have to specify that in partnership with or powered by to be able to deliver on that service. So yes, license is essential because I think the parts of license is essential, but you can still be able to provide services if you're able to find the right partner to work with and sign the right MOUs and partnership agreement that would allow you to offer the services that you need.
All right. Thank you very much. Back to you, Onyinye. Thank you. So yeah, let's first start with the question that we have there.
Okay. Okay. So to answer the question on whether an unlicensed fintech, right, can participate in the open banking ecosystem, well, I would say yes. They would typically be classified as tier zero participants, and at that tier, they have access to some level of data, but not any data that ties to a specific end user. So they have access to it's called the PIST and the MIT in the open banking framework. So that is the public product information, which includes things like branch locations, rates, fees, and whatnot. And then also they have access to anonymized market data. So any data that is not directly linked to a personal customer, but they can access some customer financial data if they are sponsored on the open banking registry through a tier 2 or tier 3 participant. That is, well, any deposit money bank or any fintech, any CBN licensed fintech or bank. So yeah, through partnership or sponsorship with them, they can access customer data, but it is now left to the bank or to the fintech to run regulatory checks on the unlicensed participants. So I hope that answers your question. Okay, you're muted, so I can't hear you.
Oh, sorry. Yeah, thank you for that. I think we have another one directed at open banking. So, Kira says open banking is still too expensive now and not very accommodating and encouraging, majorly for innovation, right? Like we see in more developed economies. Do you think there is any larger initiative, either on the provider or policymaker side, to like mitigate this or to change things? I think this
I
also
can't
could open up to other speakers. Well, let's start with you.
Okay, I can't yet speak to direct initiatives, but yes, the CBN has acknowledged certain gaps that do have to be filled in I think the fintech report that was released in February, because they also committed to an phased open banking roadmap later in the year. But before that can even happen, there are also certain areas that have to be addressed before open banking can go live. So I can't speak to them directly, but I hope that's in some way answers.
Okay. Do anybody have any of the other speaker want to jump on this? Okay. Um, okay, yeah. I think that's still more on the policy part of things. So, from my own understanding, I think there are certain CBN reports, right, that we can use as a roadmap, especially the framework that they've released so far. So majorly, I basically think, right, that fine, it's still expensive at the moment, but then just like we rightly said just now, that there are rooms for collaboration in terms of getting access to the license, right? There are room for partnership, which still makes you fall under certain category, right? To be able to like play in this space. And when you're scaling up, you can also scale up your regulatory obligations as well, right? So I think it's still pretty early for us to like jump into conclusion for the what's it called the playbook for open banking when it comes to the cost and how accommodating it is, because whether we like it or not, it's not live yet. So it's until it's live before we can now even like finally say, oh yeah, this is pretty expensive and this is not user friendly, this is not welcoming, right? So moving on, I think we're already wrapping up. We've exhausted our question. So I would keep the floor open for the next 30 seconds for any questions from the audience directed at any of our speakers. Then we can call it a wrap because I think our time is fast spent already and we don't want to keep everybody waiting for that long. So any question, you could either put it on the chat box or you could do by signaling by using the hand wave, raising your hand. I think you could just maybe unmute yourself and just go directly into the question. Okay, Finova said, yes, thank you for the first question he asked. Okay. Any question? Okay, I'll take that as no question. So in the absence of the question, I would like to like formally close this session, starting with thanking. Okay, sorry, one question quickly popped in before I do my vote of thanks and thanking our speakers, right? So okay, I think this is more of a statement. It says accepting payments using crypto service is highly prohibited in Nigeria. I think I would answer that. I don't think it's highly prohibited anymore. So fine, there was certain, what's it called, restriction, right? On crypto payments, or let's say on blockchain payment and services. But now there is even a new big announcement making wave by one of the unicorn that we have in Nigeria, Florida Wave, with their direct investments from Ripple, right? That's enabling them go fully crypto in terms of stablecoin for facilitating their payments. So, okay, let me, before I conclude, I'm sorry, any other speaker wants to jump on this feedback that we got? Okay, yeah. So yeah, I do agree to that, right? Accepting payments using crypto service is not anymore prohibited in Nigeria, to be precise, right? There are certain, I mean, there are still certain guidelines that one still has to follow, right? And we even saw the new wave of, I think it was the first batch of SEC approval for crypto companies in Nigeria, where we had like the likes of Quidax, I think we have AppZone. Those are like the two that can come to my mind. I think there were like 5 to 10 of them on the list that they were like approved by the Stock and Exchange Commission in Nigeria, right? To be able to like carry out certain operations that are crypto related. So if you're thinking of building something in the stablecoin space, in the blockchain space, in the crypto space, so I don't think it's highly prohibited. So you want to first understand the regulatory framework around it. You want to understand where what you need to do, right, before getting started. So thank you very much for that comment. Really much appreciated. So back to my vote of thanks. Thank you very much, Yeme. Thank you, Onyinye. Thank you, Seyi. And not just our speaker, thank you very much for our audience. You've been very attentive with the questions, with the comments, right? Really appreciate your time. And we're going to keep this going on, right? And most likely we're going to make it a monthly thing, right? So we trust we'll see you at the next edition of our webinar. Thank you very much once again. My name is David, and I remain your humble host. Bye.